Hey traders, TJ Watkins here. It is November 7th when I'm recording this. You guys should be seeing this November 8th or something over the weekend, but this is Friday night that I'm recording it. Wow, has this market just been melting down underneath the surface? I know if we look at the SPX, yes, it's been down, but doesn't look that crazy. But if you go look around the market, man, you've been seeing some destruction over the last week, and especially today. Today really felt like the bottom kind of fell out for a few names and some sectors. I'm going to show you a couple examples. But also, I think the market bounced pretty strongly today, and I think it's based on the government shutdown and all that. So that's the biggest thing right now, is I think what's happening is we're getting some liquidity is drying up. It's just gumming up the system. The gears are grinding to a halt. It's becoming a problem, all that kind of stuff. And whether leverage is getting chewed up or something like that that's kind of happening because of the government shutdown, I think the market flushed out a low today. We'll have to see. I'm looking for follow through, and we're gonna have to see if the politicians can figure out between themselves if they can get the government opened. And I'm wondering if something's going to happen over the weekend. So listen for something like that, see how the market reacts. If it's not over the weekend, then hopefully it's soon next week. And I think once that happens, the market will start to go back up again. The thing we're going to have to look for is once the government opens up, does the market get right back on track and we're starting up again? Or is it a bounce, but it eventually fails and kind of fades away and doesn't do well? If that happens, like if the government opens, market's bullish for a little while and then kind of fades, then we know that it's something else out there and that there might be some more structural issues out there. But if the market goes right back on its merry way once the government opens, then we know what the situation has been. Part of the reason, and I'm looking at this and I talk about that, is I've been seeing things like this, talking about the Treasury General Fund, and I put this in my last video as well, in case you guys saw this again, but I really think this is kind of what's happening here. You can see the amount of funds, this is like, back in 2020, that the funds had built up. And once they start releasing the funds, basically putting liquidity into the market, into the economy, we can see that assets start to go up. So in this case, Bitcoin, you can see Bitcoin went up when they started to release liquidity and assets. And we can see the same thing here, that since the government has been shut down, the Treasury General Fund has been accumulating assets or accumulating cash, money, whatever you want to call it. Liquidity piles up. And we've been seeing Bitcoin not doing so well. In fact, Bitcoin's been going down, and we've seen Ethereum really go down. And so what I'm looking forward to is to see if this starts to come down, and then we get the risk on assets going up as these funds and liquidity starts to actually get put back into the market. So that's kind of what we're looking at. The other thing is, I think the short side is getting extended. It has been brutal for some names out there. Again, I will show you some examples. We've got a lot of things that were just really rolling over pretty hard this week, and especially today. And so I think we've gotten a lot of froth taken out. So maybe that's going to be the good thing, is that if we are going to have a year-end rally, or if we're going to have any sort of rally, the fact that a lot of this frothy stuff got taken out and brought back down and kind of put back into place, it's uncomfortable and it's unfortunate if you're on the wrong side of the trade, but I think it was something that needed to happen because the market seemed to be getting pretty frothy right about now. And this is probably a good, healthy reset if you could withstand it. So I think that's kind of what we're looking for. I want to see some upside follow through next week, and we'll kind of have to see how this all lands. I also saw there are some divergences forming this week. I've been talking about it for a few days, and they really are starting to show up today, and I'm going to show you what that looks like. And they're positive divergences, and I'm pretty excited about that. So we'll talk about that as well. And guys, remember, since this is on YouTube, remember to hit the like and subscribe button, and that this is for educational purposes only. So this is what we're going to be going through and whatnot. Let's talk about these divergences. I opened up this chart, and what I want you to see, these are hourly charts. And it is the SPX, the RSP, which is the equal weight, and we have 50-day breadth. Now, this is what's interesting. If we take the cursor and we look, say, let's find the peak of the equal weight right here. So that's the peak of the equal weight. Notice the SPX, the S&P, was still going up even though the equal weight had started going down. This is very important to see because the mega caps during that week, last week, we saw Nvidia up, we saw the NASDAQ up, we saw the mega caps still up, even though underneath the surface, we were seeing a majority of stocks actually coming down. It's like, oh, okay, what's going on? Well, that's that divergence that I was speaking of last week in last week's video. And now, if we look at this, let's go to the low on the RSP. Notice here, I know we had another low right here, but notice how this is basically a double bottom, but notice how much more the S&P actually went lower. So again, we're seeing a different kind of divergence, almost like the rest of the market was both leading the way to the downside and could be leading the way in bottoming right here, because what we saw this week were the mega caps started to get hit. If you guys look at FNGU or MAGs or something like that, they're the ones that started to get hit this week and work their way up the food chain. And we started to see NVIDIA and SMH, and we saw a lot of big names like that get hit. But the rest of the market seems to be hammering out a bottom, and this is the thing that I've been talking to the Moxie subscribers about for a while. We also had a pretty nice bounce today. If you look at the RSP, notice how the RSP is now at least over the hourly 50, but look how far away the S&P is from the hourly 50. So again, divergences. And then if we look here, and this is another thing that I was talking to the subscribers about, is notice how the 50-day breadth was actually starting to put in higher lows as the S&P was going lower. And, you know, as even the RSP was starting to go lower, you could see that breadth was starting to move back up, or at least put in higher lows. So again, some of these positive divergences that I've been talking about this week and saying, I feel like we're getting close. We're just kind of waiting for that catalyst. And I imagine the catalyst is going to be the government reopening. So that's what we're looking at. As far as the SPX, yes, this has been moving down. I haven't actually taken any short trades on this because I didn't know really where it was going to go. I didn't think it was going to go down this far, but there you go. It basically got rejected by the hourly 50. We did get the Moxie price trigger to the downside, and you can see here it basically followed the 15-minute to the downside as well. I had a couple trend lines here on the daily chart trying to figure out, hey, where is price going to stop? Is it going to stop at the 21? No. Is it going to stop at the trend line? No. How about the daily 50? Well, maybe, maybe this is it. So maybe this is where it went down to, kind of back into this area, back into the daily 50. We do still have the 8 over the 21. So we are still technically in an uptrend. This is just a pullback in an uptrend. And so we're going to have to see how this continues to move forward and where it goes. The other thing is if we look at the weekly chart, we were a little overbought last week. You can see there's a gap here between price and the moving average, and we've at least come back down to the moving average. So again, kind of working off this overbought condition. If we look at the RSP, it's kind of what I showed you with these divergences. The RSP, I think, has already come down, and I think it's working on hammering out a low in through here, and we just need to see if this is actually going to start moving back up. It's been a challenging week for sure, but I think we're seeing certain things to the upside that I like. If you look at the IWM, this too, got rolled over and got pretty hammered. Less divergence. I don't really see any divergence here, but it had a pretty good snapback today. I actually wasn't thinking that this was going to happen. I figured who's going to buy going into the weekend after such a long situation. But I think some news started to come out that the Democrats and the Republicans were starting to make bids and offers about trying to make deals to reopen the government. I've been hearing they were kind of shot down and debated, but at least they're trying. So there you go. Okay. Anyway, we got that. The one thing to kind of note from here is the IWM has now at least come back within the 8 EMA and close to the 21 EMA on the weekly chart. So again, the whole story here is taking the froth out. And I think this is starting to help that. We've kind of pulled back, we've reduced some of the froth, and I think this is now trying to become into an area of consolidation to where if the market wanted to go higher, it now has room to do that because it's just taken so much froth out of the system. And take a look at SMH. This was another thing that if you look at the weekly chart, this thing was just sky high. I mean, look, we were super duper high up here, and there was a huge gap last week right there, and the market now has come back down. So that's at least good that we're kind of back in this area. And then if we look at the daily chart, I was expecting this to pull back. I knew that last week was way too high. I mean, you can see that thing's just floating in outer space. I didn't know where it was necessarily going to go. Like, okay, it was going to hold the 21. No. And here you go. It comes back down here. And again, just kind of back in this area. And given some time, it might end up actually being pretty close to the daily 50. It's still too early to tell. I think next week should give us some clarity. But this was a pretty good drop. And then it got mostly bought up today. So I think that's good. I think that is going to be constructive, but we're still going to need a little bit more time. And then if you look at FNGU or FNGS, And you can see this too. We just had this giant bump up last week, and it was just too much. And I knew that the market was going to be pulling back. I just didn't know how much it was going to do, or like where it was going to go. But it's at least now back into kind of where it was before it had the bump. So it's almost like, just kidding. Let's go back to where we were. And maybe this is going to provide a new base to start from. So that's all I can kind of look at and say. They took the froth out, they brought it back down, and said, "Yeah, sorry about that bounce. We're going to come back down here, and let's try this again." You can also look at ARKK. I was kind of leaning more on the side of this being a bull flag. I was kind of thinking this was going to hold kind of like this. Guess not. They wanted to drop it. Okay. Again, taking the froth out. You look over here on, say, the weekly chart, and this thing was pretty extended. I didn't know if it was going to just hold it sideways before going higher, but now look, it's at least back down to the weekly 21. So I would argue that this is no longer considered overbought, and a lot of times the weekly 21 is support. So you look at these things and you're like, okay, if this holds, this is a good area to hold from, and this is at least constructive that they've gotten the froth out. Things were too high. They were too far away from the moving averages, and we got a nice move to the downside. So again, I know this was pretty uncomfortable for some people in some positions, and we had to ride some of this down too. But I think that this got pretty overdone, and I think we should start to see these things hammer out a low, start to come back, and let's see if it works out with the government reopening. We can look at XLF. This is the financials. Now, the thing to be positive about this is that the financials had already been coming down for a few weeks before all of this happened to the rest of the market. Okay, so that has already been moved down. It's already down to support. And notice what's happening. While the rest of the market was actually just rolling over and dying, the XLF was actually putting a double bottom and trying to repair back to the upside. So again, just trying to take the froth out of certain sectors, and then once it's all tamped down, then they can start building it back up. And I think we're getting close to that area where I think we can start seeing these things actually move back up. Okay, then let's take a look at breadth. And let me look at this. Let's refresh this real quick. And the interesting thing about breadth this week was that, this was last week where the market jumped up and then came right back down. I talked about that, and you can see it came right back down. But the interesting thing was over the last few days, even though a lot of things got hammered this week, you look at 20-day breadth, it actually didn't really go down. And then now you can see as of today, it's starting to come back up. So I think this is looking pretty good. It's been weird out there, but I'm looking at breadth and kind of turned back around. And we could see the same thing here. Other than the hammer that happened from last week, 50-day breadth is actually starting to hold and perhaps coming back up. So again, we're looking for these things to kind of finish their downside move and actually start moving back to the upside. The other thing, let's take a look at the VIX. The VIX is definitely putting in some signals, and it was definitely moving up. So the only thing I can kind of point out here is that it did test the hourly 50 with the Moxie indicator crossing over zero, and we got our move up. Now, this is in an uptrend. This is in an uptrend until otherwise. Now, I'm pretty happy to see that this thing came back down pretty hard today, but I'm going to have to see this thing basically break this channel. If we can break this channel and start to come down, awesome. Then the market's going to move up. I'm happy to see that. And it was kind of like, oh, false alarm, because this looks like a pretty good setup. It looks like this thing could really get going. But again, remember, it's the VIX. It could set up and then kind of fail. This is people kind of getting ready, and there's some fear, and they're hedging, and they're trying to protect themselves, and this is why it's moving up. And we can also look at the UVIX, and this certainly looks like it could go. But if things change, it could also roll over, and that's the same thing. We're kind of looking for this thing in this channel. I want to see it roll back over. It could build up, and then just start to let the air out. That would be awesome. But right now, it's moving up. We do need to be careful and pay attention to it. Okay, so then let me show you a couple tickers of examples where just the froth has been taken out of this stuff. Here's NBTS. It's a chip manufacturer, and a huge move. I had this thing on my weekly watch list. It was a public video. I told a lot of people, hey, this looks really great, and there was a good move in it. But it was super duper extended. I mean, look at the thing. It's just straight up. And when the market started to say like, there's no liquidity, and we are going to start selling off the things that are too high, they just really hammered these things. And at least this is right back to where it came from. So this was a huge move right back down. Yeah, it's kind of uncomfortable if you were in it, but you can see here on the hourly chart, it continued to just get rejected by the hourly 50 and then came right back down. Is this buyable? Not yet. It might be. This might be the low, but it's a little too early for me to buy anything with this. I just want to show you guys that here's another example of just the froth getting taken out. And then FFTY, this is the IBD 50. Here's another example of this thing just up, 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 up. And then finally, we get some froth taken out. And at least it's back down to the weekly 21. Is it buyable? It's a little too early to say that it's buyable right now, but at least I can show you that there are areas where we got a double top and then we really just rolled over and came down pretty hard. I would imagine this is getting excessive. We've had 4 or 5 days of markets like this going straight down, and I think it's mostly tied to the government shutdown. So if we can kind of get that rectified, I think we should see these things come back up. But again, too early. I mean, today only just bounced from being oversold. We don't really know enough yet. We'll have to see what next week wants to do. And then if we look at Pony, another example of something pretty high up. They sold it off, it bounced, and then they sold it off even more. This portion right here over the last 5, 6, 7 days seems excessive. I mean, you can see, just look what they did. They really just said, boop, we're gone. We're just going to sell it. I mean, there's a huge vacuum, like buyers just step aside, short sellers maybe came in, and whoosh, there just was, they just pulled the rug out from underneath. That being said, we are back to potential support. We're back to a consolidation area, and I think these things are looking pretty darn stretched and overdone to the short side. So I would start looking for long plays. It's too early, but I would be looking for that, and I definitely would not be short anymore. ABSI, this is another one where you can see kind of did a round trip, like, oh, big move. Oh, nope, coming right back down. It does have earnings, so be careful about that. Just another situation where this thing was sky high, and at least they're pulling it back to the daily 50. So these could end up being good trades. They just all got overdone over the last few weeks, and now it's just kind of right back down to some support. Okay, then let's take a look at Ethereum. This was interesting. This is what I talked about my midweek video. I think I talked about it even last week. This is where we were seeing kind of the risk on assets really get demolished, and they had been coming down for a few weeks, and when the liquidity dried up and risk on was just not of interest, these things were coming down. Now, I really was looking right here to see if this was going to hold support, and it did not. Okay, so that was kind of where I got some surprises. Is it failed this level and then they continued heading it down. At this point, this is starting to look kind of excessive to the downside. I think we hit some lower levels. And the divergence to see is that over the last 3 days, Ethereum has actually put in a double bottom and wanted to go higher, even though the S&P and the FANG stocks went down the last 2 or 3 days. So this was putting in some divergences, and I think it's hit some major support. So I would start looking at these risk-on assets. If they can start coming back on top and start to move, then I think that's going to help tell us that the market is probably done going down. Nail, this is a leverage ETF of the home builders, and I put one position on earlier, and then I just I added to that position. I was a little too early on my first position. I put it on right about there. Didn't work. I have plenty of time. It's a March position, and I actually added to it here. And again, I think the reason is because if we look at these things, this is oversold. This is really, really stretched to the downside. Not to mention, I'm seeing some divergence here on the hourly Moxie Indicator. We've got squeezes, we got a squeeze that might kind of come back there. And look, we actually popped up today. So I think this is looking good, and that's why I wanted to add into this one, because I think I'm right about this idea, and I just got the first timing wrong. Okay, then let's see. AFRM, yeah, this thing's been coming down for a while, and right here you can see it's been coming down for a while, but it has been slowing its descent. Notice that it really started to try and find its base, even though the market was coming down for the last week. And then it had earnings, and it's back up on earnings. Again, nothing that I can totally point to yet, but I think this thing has pretty much pulled back and taken the froth out, and it's finding some support. And it looks to me like it could be another situation where this is actually getting ready to go higher, as long as we get the market support and just kind of get this government shutdown thing worked out. So I think that was looking good. And then MODG. This is Topgolf. Maybe a lot of you guys know about this one. I've actually been talking about this for a few weeks. It's not the most obvious ticker, But I think that this monthly and weekly chart are looking really good. I really think this is going to be a good long-term trade if anybody wants to get into it. I do think Topgolf is making money, and they just had earnings, and look what happened on earnings. Breakout. So nice breakout on earnings. I think that's the green light. So if you guys are interested in MODG for Topgolf, looks like a good chart. All right, DDOG. We were in this. We have been in this. We actually took half off yesterday. The market was melting down. This thing was going straight up. Awesome. We got into it right around here. We actually got into DOGD, which is the leverage ETF of DDOG. And right there, we took half off of our profit. Let's see, DOGD. You can see we got into it about here, and we got out here. It's about a 40% gain. Not too shabby for when this market was melting down. So we did get a nice 40% gain. I think this thing is still looking great, but it's always nice to take some profits. Let's see what it does, and we can always add back into it once we figure out where this thing wants to go higher from. But that was a nice little treat yesterday. And then Tesla had their annual event. Typical buy the rumor, sell the news type situation. Also, the market was just looking really shaky. And so what we did is I took off both of my call options. I had one that was deeper in the money. I took it off for 220% gain. And then I had one that I thought I was going to handle because I thought this thing was going to go up a little bit sooner. And we lost 30% on that one. So, but not too shabby between plus 220 and minus 30. And I still have stock on this. I still have leverage ETF stock. And now that this thing has come down, because I was concerned it was getting a little bit extended, and actually if you look at the Moxie Indicator, it really wasn't looking good. And then so I was like, yeah, I think this is going to come down, and the market was looking kind of shaky. So I'm happy that I took off my positions as far as my options. Happy to see that it's come down, because I think eventually this will help us find good buyable opportunities to get in this. And I'll set some more options into this thing further dated, just to give me some time and see when this thing wants to go. But I'm still bullish on Tesla, still on the stock, and I want to see when I can actually get more aggressive with options. Okay, so thanks again, guys. I hope you enjoy that. I hope you are surviving this week. I know it's been tough, but I think we should be close, and hopefully we see some developments next week for this market to get back on track, and let's get that year-end rally. I think we are all ready and waiting for it, especially after this week. Okay, thanks again. Remember simplertrading.com, and I'll see you guys later.